All right, folks, you already know the deal. The greatest transfer of wealth in world history does include the real estate asset class. I describe this situation as a real estate reset. Although we are seeing some markets are still climbing, we are seeing a reset, prices coming down, new inventory finally showing up, which is typical of this spring selling season. But in this video, I want to explain why I think that we're actually looking at a shift back to a 2024 buyer's market. And if you want to take advantage of this thing with me, please make sure you subscribe, hit that notification bell so you don't miss any of our updates. And a quick reminder that I've just created a new real estate reset playlist where I have all of my real estate updates. And it's going to be a lot of fun to look back on this and see if I was right, was I wrong? I firmly believe here that this data is showing us that it's a shifting of the pendulum back towards a buyer's market. Let's take advantage of it, folks. Right on into the update. Now, I wanted to share this because this is important. Right now, this is where we're at in the markets with commodities. Oil, 5-month high, copper, 14-week high, silver, 2-year high, gold, record high. Central banks are seeking support from taxpayers due to eating losses from QE, priceless. Now, why am I bringing up commodities in a real estate update? Because it reiterates the important thing to consider with real estate. We're buying packaged up commodities, whether you're just looking to buy a house for yourself, right, your main residence, or you're looking to invest in the real estate asset class. What you're buying is a packaged up commodity. Land itself, I think we can consider it as a commodity that they're not making any more of it until we find new planets that we can conquer. I guess we're going to go to Moon and Mars or something like that. But in the meantime, right, we have a limited supply of these commodities. You're seeing them spike. And what's interesting is that the Fed has had to raise rates to fight inflation. Which asset class has it impacted probably the most, right? Other than the credit markets, has been real estate, which is primarily driven by the debt market, right? And the availability of credit. And so this is why it's a shift back to the buyer's market, because we have a lack of inventory in some markets still holding it up. But in other areas, we are getting flooded with new home inventory and new units. Now, what you're seeing is a record amount of apartment building and multifamily housing, along with single family homes as well. But you have to consider that into the equation for what are, single family homes going to do. If there are thousands upon tens of thousands of multifamily apartment units coming online, right, and you can move into a brand new spanking 3-bedroom apartment, some folks are going to make that sacrifice versus going to buy the new home down the street that's going to cost them more to move in. And this is the case in many of the metros across the country right now. It's cheaper to rent than buy. But I think that shift, that is moving back as well. And so this is something that I want us to understand, because whether you're a renter, you're a buyer, or an investor, the opportunities are presenting themselves. And this is not just me, guys. I'm going to show you the data. There are a few signs that home price growth could soften. This is from Redfin. Nearly 6% of listings had a price drop, the highest share of any March on record. Let me repeat. Nearly 6% of listings had a price drop, the highest share of any March on record. So yeah, we have a bunch of inventory coming on, typical of the spring selling season, but we have the highest share of price drops in March on record. Months of supply hit its highest level of any March since 2020, indicating that the market is becoming more balanced. So the sellers are in full control, right? In some of these markets where there's still a lack of supply, they definitely are. Prices are still going up. But in some of these metros, some of these other markets, we have a new home price crash taking place. And this is generally speaking across the country. Since their peak in 2022, new home prices are down about 20% in 16 months. By comparison, new home prices fell 20% in 43 months during the 2008 financial crisis, according to Reventure. This means that new home prices are officially falling faster now than they were in 2008. This time it's different. This time it's worse, as I've been saying, as is now confirmed by the data. As new home prices fall, home builders are offering incentives such as reduced mortgage rates, but it doesn't seem to be helping. The reality of the housing market is that demand isn't as strong as it appears. We simply just don't have enough existing home supply. Depends on which metro you're talking about. Depends on which zip zip code you're talking about, right? And what you have to consider too is that the real price drops are actually far worse, far more than what's being reported there. Because all of the incentives, all the rate buy downs, all of the deals that, all the things that they're having to put into these deals to get these new homes sold, that's not included in the overall price drop. So they might not even be dropping the price, but now they're doing a rate buy down. Well, that's a form of dropping price. Yeah. So this isn't being tracked in the data. It's actually a lot worse. Okay. But nonetheless, let's look at this next data point as well. From Zillow, new listings increased 20% month over month in February, the largest monthly gain since at least 2018. The monthly gain in new listings surpassed other recent increases by a significant margin. Overall, new listings are 20% higher than this time last year. Total inventory in February, the number of listings active at any time during the month, increased 3.4% from January and was 12% higher than February of 2023. But it remains well below prior years, so don't let the percentage gains fool you. Yeah, we still have a long ways to go. Foreclosures are still way behind, even though they're picking up, right? New total inventory picking up, but it's still way behind, right? Traditional levels. And so, meanwhile, the share of listings with a price cut was 20%, more common than normal. Well, we just got it out of the last data point, right? That it's the most most price cuts in March on record. And now Zillow's saying that the share of listings with the price cut was 20%. See, we go back to Redfin, they're showing 6% of listings in March had a price drop. That was the highest on record. We go to Zillow, they're saying that we have 20% price cuts. A little more common than normal, you say. Oh, really? If you're thinking housing crash, note that the company pointed out that most sellers will have plenty of cushion to absorb a price cut and come out ahead from when they bought their home. Well, of course. But the problem, and this is the problem, is that we're showing that Americans have 50 trillion net worth on paper. Well, and this is with an overvalued stock market, and this is thinking that they're going to be able to get their Zestimate is what they're going to be able to actually sell their house for. And so this is, where we're coming back down to reality, where many people are still in profit. Many people are still making money. When I talk about some data points, some things coming down in real estate, a real estate reset, it doesn't mean we still can't make money. It doesn't mean that it's still not a great asset to store and build wealth in and to take advantage of the tax advantages as well, right? So this is why I'm so excited, is because the pendulum is finally shifting. Now, is this going to be, as strong of a buyer's market as we saw during the depths of the great financial crisis during 2009 and 2010? When these markets bottomed out, right? No, we're not there yet, okay? But as far as, can we say that we're trending back towards a buyer's market? In some markets, we are. When you go approach the new home builders, we 100% are back in a buyer's market, right? They're doing everything they can to move this inventory. Now, in markets where inventory is still low, prices are still going up, sellers are still in control, and the builders that are still putting out inventory in those markets still have the best hand at the table. But it is shifting back to the buyers. And remember, this is happening during the spring selling season when inventory is flooding back on. What doesn't get sold this spring, and I'm seeing plenty of inventory that's still on from last year, I'm seeing a lot of folks that are just throwing out numbers, seeing what sticks. And time after time, I'm saying when they throw out a number, I'm saying no way, ain't going to happen. Sure enough, it sells 30 to 60 days later for 10% discount. So the price drops are coming, and big price drops are coming, especially in my area where we're way above the average median home here in the United States. So if it makes sense to rent in your area, right, you can pay $2,000 in rent versus the mortgage is going to be $4,000 to $5,000. I understand why many people are still going to choose to rent, but it is shifting towards a buyer's market, which is good for the renters as well. You got way more options. In some markets, you got apartments that are offering 3 months free rent to get you in. So this is all what I mean, where the pendulum's shifting back to where renters have options, buyers are going to have a little bit more negotiations to be had, right? And it's not going to be total control for the sellers. And the other part of this too, right, is that the National Association of Realtors just did that major settlement. And so now all the commissions are basically negotiable, and it's not going to be the standard procedure for the sellers to pay that buyer's agent the 3%. It's going to be up to the buyers to work that out with their own agent and come to the table with some sort of deal. But I just think that this is going to put more attention on folks being willing to negotiate. And if you want to get these deals moved, right, you're going to have to work a little bit. This is not the 2022 real estate market anymore. And so this is why I'm describing the situation as a real estate reset. And I believe that we've entered a 2024 buyer's market. I want you to be able to take advantage of it. Let me know what you want me to cover next in the real estate market. We got more updates coming. The new playlist has been created. Make sure you guys check that one out. The real estate reset playlist. More content coming, full updates coming for you later today as well. So make sure you guys subscribe, hit that notification bell, and all of my community resources can be available at zachrector.com for you. Take advantage of it, folks. We'll see you in the next one. And by the way, let me know in the comments down below what you're doing in 2024. Are you going to continue to rent? Are you buying? Are you selling? Let me know in the comments what you're doing. I'm going to be reading all the comments, and I really do appreciate all the feedback. Thank you so much, guys. We'll see you. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.